With Hong Kong, China and Singapore all on holidays, all eyes will really be on earnings in Australia. The three standout reports today come from Super Retail as well as AMP and Crown. If we have a look at these three companies, what we've seen is new information coming to the fore, and this should help to support share prices. First of all, let's have a look at AMP's result. We have seen a good result with underlying profit up by 23%. Importantly, its contemporary businesses, so important business units, are growing at double digits. It's very hard to be bearish on a company like this, given that the wealth management market is worth $2.4 trillion and Australia has the fourth largest pension funds market in the world, worth about $1.9 trillion at the moment and expected to triple in the next 15 years. So AMP's result, a strong result there, good momentum throughout its business, and its shares should perform well. We have a look at Crown. Crown has had a pretty hard 52 weeks, and that's because its expectations around the Macau casinos, the Chinese crackdown on corruption as well, having an impact on casino revenue. Now we have seen that flow through with Macau revenue down by 21.5% for Crown's share. But if we have a look at the Australian businesses of Crown, they've been performing very well with revenue up by 16%. So it does look like the market's already priced in the bad news around Macau, and with the Australian businesses performing well and underlying profit up by 2.3% for the group, Crown should have a pretty good day. Now the last one is Super Retail. This is also a company that's been struggling over the last 52 weeks, but it does look like things are turning around here. The first half was still fairly difficult, but it does look like an improvement for both sport as well as the leisure units from its last trading update. Importantly, we've started to see numbers out for the first 7 weeks of the second half, and we are seeing an improvement there. Auto up by 3.5% in terms of sales, sport up by 9%, and the leisure unit also seeing an improvement up by 6.5%. So it does look like the worst is behind Super Retail Group. It does look like the stock and the business has bottomed out, and it looks like things are on the improve there. The market usually likes the sound of that. So those are the three stocks that are likely to outperform today. We've also heard from Wesfarmers. Now, if we have a look at Wesfarmers' results, we have seen profit down by 3.7%, dividend up slightly to 89 cents from 85 cents previously, so that's an increase of 44.7%. But given that we've seen Wesfarmers shares up by 10% since the start of the year, I don't think this result is going to be enough to continue to power on that strong trend that we've seen since the start of 2015. So we're likely to see a little bit of weakness in Wesfarmers shares. We're also likely to see weakness in Drill Search's shares. We know that it's been quite difficult for Drill Search. We have seen announced today some big cuts to capex in the next financial year, as well as the financial year after that one as well. And Origin Energy revenue down by 4%. We have seen in the area of exploration and production that there has been lower liquids productions, and that's dragged down on the results. So we could see a slightly negative reaction in terms of Origin shares, but rather neutral in terms of that result today. So big day here in Australia. We are expecting to see the focus being on those earnings that have come out today.